Most people could start investing years earlier than they think, but that little bit of extra money feels too important to risk. So it just sits there. Every investing option out there seems complicated or risky or full of people trying to sell you something. And nobody's really explaining what's safe and what isn't. So the money sits in a savings account or gets spent, or the whole idea just gets pushed off to someday. The truth is, none of this is really complicated. It's not even that hard. It's actually pretty boring. You pick a strategy, you put some money into it every month for years, and the payoff shows up later quietly while you're busy living your life. Literally anyone can do this. You don't even need a lot of money to start. But not every strategy pays off the same. Some make you far more money than others, and there's one that pays off almost right away. It's safe, it's low risk, and it's so boring and unsexy that most people won't even want to talk about it. I'm going to show you 4 investing strategies, compare them with real numbers, and tell you which one I bet on, so you can decide for yourself. And you can even get started today if you want. My name is Adam Williams. I'm the founder and CEO of Ellevest Capital, a private equity firm based in Scottsdale, Arizona. Last year alone, we closed on over $200 million in real estate transactions. I spent over a decade chasing exciting investments, and eventually I found the boring one that actually worked. Let's go ahead and start with the exciting plays, the ones that most people spend years chasing before they figure out what actually works. There are 3 traps, and we're going to go through them right now. Trap number 1, stocks. Stocks are probably the most universally accepted investment on the list. And look, over a long enough time horizon, the market generally goes up. I'm not here to tell you that stocks are worthless or they're bad, but the honest math on building wealth through stocks looks like this. The average retail investor significantly outperforms the market they're invested in. Excitement triggers bad behavior. Buying when everybody's talking about how great the market is, which is usually near the top. Selling when it crashes, which is usually near the bottom. Chasing the hot sector, rotating into whatever just worked, doing the exact opposite of what the math requires to be successful. And even the disciplined ones who hold index funds long term are dealing with full market volatility with zero income while they hold, and tax treatment that's almost entirely ordinary income or capital gains with no meaningful offset. There's no depreciation, no leverage from a bank giving you 70% of the purchase price, no monthly income hitting your account, just a number on a screen moving on forces you have zero control over. The stock market is fine, it's just not where serious generational wealth gets built. So by default, people typically start to look at something faster. That's where trap 2 comes in, crypto. Now I'm going to be straight with you on this one. Crypto has made people extremely rich, real people and real money. I'm not going to pretend otherwise, but the highlight reel for crypto leaves something out. For every person who's bought Bitcoin at $5,000 and held it through the run of $60,000 or even $120,000, there are 10 who bought it at $55,000 and then panic sold down at $20,000. The volatility that creates the massive upside also creates massive downside. 50% drawdowns in crypto aren't rare events. They're basically scheduled. Zero income while you hold, no depreciation, no leverage from a bank, no tax advantages at all. In fact, the tax treatment on crypto is among the worst available. Every single trade is a taxable event, and gains are treated as capital gains with no offsets. Crypto is a speculation, sometimes a very profitable one, but speculation isn't a wealth building strategy, it's a bet. And the people who built lasting wealth didn't build it by making the right bet at the right time. They built it by owning things that produce income. So what about building it yourself, one house at a time? That's where trap 3 comes in. Flipping. This one's kind of personal to me because I did 252 single family deals and I know flipping inside and out. And here's my completely honest take after all that experience. Flipping's a great school. It teaches you real estate fundamentals, how to evaluate a deal, how to manage a renovation, genuinely valuable skills, but it's also a job every single time. There's no passive income. The moment you stop flipping, you stop making money. Every single dollar you earn gets taxed as ordinary income because the IRS treats flips as inventory, not investments. No depreciation, no 1031 exchanges, no tax advantages at all. You're grinding for profit on individual transactions while your tax bill absorbs a massive chunk of every win you get. And then you start over again and again and again. I did hundreds of these and I'm proud of the skills that I built, but eventually I had to ask myself, am I building wealth or am I building myself a job that happens to involve houses? The answer is obvious. Okay, so what actually works? Here it is. The investment nobody brags about, the thing that makes exactly 0 people say, wow, tell me more about that. I'm talking about large, multifamily apartment communities. I know, I can feel you wanting to scroll away, but stay with me for 2 more minutes because the math is what makes this one click. Let's compare. Stocks, crypto, flipping, and multifamily side by side across the things that actually matter for building real wealth. Let's start with your monthly income while you hold. Stocks, almost none. The average S&P 500 dividend yields around 1.3%. And on a $200,000 investment, that's $217 a month before taxes. Crypto, zero. No yield, no distributions, nothing. Flipping, zero passive income. You only make money when you sell. Multifamily is the only one that produces real monthly cash flow. On a $200,000 passive investment at a 4% cash-on-cash return, that's $667 a month, showing up in your bank account every single month whether you work or not. Now let's talk about the tax efficiency. On stocks, dividends are treated as ordinary income. Capital gains taxed at 15 to 20% plus the net investment income tax. You get no offsets. Crypto, every single transaction is a taxable event. No depreciation, no offsets, one of the worst tax structures available. And flipping, all of your profits are taxed as ordinary income, up to 37% federal. You get no depreciation and no 1031 exchanges. Now let's roll into multifamily. Depreciation offsets your cash flow distributions. In many cases, you're going to receive monthly income and pay little to no taxes on it. 1031 exchanges let you defer gains indefinitely. Your heirs get a stepped up basis that can eliminate the deferred tax entirely if you structure it properly. Now let's get into leverage. Stocks, none. You only get dollar for dollar of your investment amount. Crypto, leverage is technically available, but margin in crypto is the fastest way to get liquidated. It's not a serious wealth building tool, it's more of a casino in my opinion. Flipping, hard money does exist, but at high rates and short terms that eat up your margin fast. Now let's get back into multifamily. A bank gives you 65 to 70% of the purchase price at a reasonable rate. You control 100% of, let's say, a $10 million asset with a $3 million down payment. Every single dollar of appreciation, every dollar of cash flow, every tax advantage on an asset that's more than 3 times the size of your investment. Now let's talk about compounding. Stocks. Your gains compound if you reinvest, but you're fully exposed to the market swings the whole time. Crypto. Your gains compound if you hold, but so do your losses. And flipping doesn't even compound. Every deal starts from scratch. Now again, with multifamily, your cash flow can be reinvested into more deals to compound. Equity built through depreciation and debt paydown can also get reinvested into the next acquisition and will compound. And tax efficiency means more capital stays invested instead of going to the IRS. The compounding here is the most powerful on this entire list, hands down. There's not one single category on this list where multifamily doesn't win across the board, not a single one. Boring investments require discipline, not because they're hard to understand, but because you have to sit tight and do the same boring thing over and over. And it's genuinely difficult to stay committed to something that's not super exciting. When your friend is telling you about his crypto trade that just tripled, and you're quietly sitting here collecting $667 a month from an apartment building, that boring path requires a kind of confidence most people never develop. But 10 years later, that boring path looks very different. The people who made the disciplined decision a decade ago, who said no to the exciting plays and yes to the boring one, are the ones who look like geniuses right now. They weren't smarter and they didn't get lucky. They picked the one asset class that produced income, built equity, and protected against taxes, and compounds over time, and they stayed with it. You're one decision from being that person. Not a complicated decision, not a risky one, the boring one. So if this landed for you, if you're sitting there realizing that the exciting stuff isn't the answer and you want to understand the boring one better, I've got 2 things for you. First, if you want to go deeper on exactly how passive multifamily investing works, I've linked a video in the description below. It breaks down the entire mechanics, the numbers, and what to look for in an operator before you invest a single dollar. And second, if you want to be around other people who are actually doing this, come join our free community at school.com/more club. It's completely free. We've got hundreds of real estate investors in there doing deals every single day, sharing what's working, asking real questions, and helping each other move faster than they would alone. Both links are in the description below, and I'll see you there.